And this week we're looking at the ICICI Prudential Tax Plan. Remember, we're already in December, which gives you only a few months to make those tax investments. So if you haven't done them so far, now is the time to do it. Avan is going to give us an introduction into that fund, and then we'll come back and talk to Dhirendra about it.
Thanks for that, Faye. Well, launched in February 2006, the ICICI Prudential Tax Plan has had a stellar track record, which proves it can deliver, especially when the market is rallying. Investors with a long-term horizon should consider this fund, but keep in mind the fund's high exposure to mid and small caps, which does make it vulnerable to volatility in the short term. For example, the fund's strongest returns were in the bull run of 2009, when the fund returned over 100%. But in the bear run of 2008, the fund suffered some heavy losses, falling over 50%. In comparison to the rest of its category, the fund has stayed in the top 10 for over a decade, beating its benchmark consistently since its launch. Even though this fund has had a 3-year lock-in that comes with every tax saver, it might make sense for investors to be prepared to stay invested after the lock-in expires to allow the fund to really work for you. Let's do some math to give you a better perspective. If you invested 1,000 rupees in this fund, you would have 16,789 rupees today. So should you be invested in this fund or pull your money out? Our experts are here to give you the answer. With that, it's back to you, Faye.
Alright, Avan, thank you for that introduction. Dhirendra, ICICI Prudential Tax Plan has been a 5-star fund for a very long time. But I want to ask you about the higher mid and small cap allocation that this fund has. It's a little aggressive. It tends to fall a little bit during bear runs as well. What sort of caution should investors have when they're investing in this fund?
No, I think, despite all the kind of decline that it has seen, ever since 2009, this fund has been able to consistently beat the market on by a wide margin. And looking at the portfolio, a portfolio of about 61, a little over 60 stocks often. And this is very well diversified. It does not concentrate, and it's a very high quality portfolio. I never come across an unknown name in the portfolio. And it's a good mix of, growth, value, or, sometimes a very opportunistic position, but never a big compromise on quality. So that way, I think, this fund has made a very great impression in the last 4 or 5 years.
Dhirendra, for someone who's looking to make a tax-saving investment this year, over the next 3 months, although they are starting late, is the ICICI Prudential Tax Plan an option for them?
Yes, it is an excellent choice, and it is worth considering. Averaging it over the last 9 months would have been beneficial. Nevertheless, it's a good time to be investing in your tax, making your tax-saving investment, and this is a worthwhile fund.
Finally, Dhirendra, this fund has 5 stars on your website. What would you rate it on the show?
This is a 5-star fund, and it is for just the right reason, just the right combination, which is despite assuming risk, statistically it shows, relatively lower risk and reasonably high return. So this is a worthwhile fund worth investing. 5
stars for the ICICI Prudential Tax Plan on Investors Guide, and over the next couple of weeks we're going to continue to review tax plans to help you make those tax investments this month, so you don't wait any longer.